All right, welcome back everybody to Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin, and like always, let's check out where we stand in the crypto market. Starting with Bitcoin. As you can see, the price of Bitcoin is beginning to recover off of those weekly lows that we saw about a day and a half ago. And while total market cap continues to stay the same, hovering in between 110 and $113 billion market cap, so no significant change here, the price of Bitcoin is back down to 3,400. Let's zoom in on the price of Bitcoin. This is the price of Bitcoin 7-day chart, and this is that 2% pullback that we saw about a day and a half ago. Of course, days before that, we were attempting to break past the 3,500 resistance level, break past it and sustain past it. We couldn't do it. The market pulled back and the price of Bitcoin bounced off of 3,400. Now, for those of you that subscribe to this channel, you know that I'm long-term bullish on the future of Bitcoin. But in the short term, this is a little bit of a bearish indicator, because what this tells me is that there was a clear lack of buying power at 3,500. And right now, at the moment, even 3,400, saying that the whales are not interested in buying Bitcoin at such a quote-unquote high price. So while long-term I'm bullish, to me this indicates, and I hope that we'll consolidate and we'll retest the 3,500 resistance again. To me, what this says is short-term wise, we might have further down to go. Let me know what you think. By the end of this video, I want to clue you in on Ethereum update. There's a lot of contention in the Ethereum camp right now. And one quote from one developer says, the issue is going to be resolved by us making an effing decision. A lot of contention. I'll clue you in on this Ethereum update at the end of this video. Before we get to the other news, I do want to clue you in on one more altcoin. Pretty stagnant market today, except if you scroll down to some of these mid-cap coins. Basic Attention Token having a hell of a day. Yesterday, it had a hell of a day, and it seems, wow, it's continuing its little surge. Why is Basic Attention Token rising in market cap so much? A lot of people are guessing, whoa, was it just added to Coinbase? Is that the reason? No, it was added to Coinbase weeks ago in certain regions. But the only reason I can find is also coming from Coinbase. We've launched a new Coinbase Earn page where you can earn Basic Attention Tokens and earn up to $10 worth of BAT today by completing educational lessons and interactive tasks. I did this. They sent me an email. I earned $10. If you guys want to take advantage, if you complete it, they'll put $10 of Basic Attention Token right in your account, Coinbase account. And 7 of those $10 came from downloading Brave Browser. And I already had Brave Browser. So all you have to do is click a button. It verifies that you do indeed have Brave Browser, and they'll give you they'll give you $7 worth. Earn the other 3 by answering a little quiz. Pretty cool. This is the only reason that I could find that Basic Attention Token would surge so much. But let's get real, because on this channel we will always keep it real, and I don't know if I'm just jaded by this bear market, but to me this seems more like manipulation than actual honest people buying in. Let me explain. And honestly, nobody cares about manipulation when it's in favor of your coin. But to me, it just doesn't seem realistic that so many people who had a Coinbase account had no clue what Basic Attention Token is. And after completing these quizzes and getting free Basic Attention Token, they FOMO'd in and they just kept buying Basic Attention Token because they finally learned what it is. To me, it doesn't seem like there's that many new people in the space right now. Everybody pretty much knows what Basic Attention Token is. To me, I'm just guessing, it seems like a marketing ploy from Basic Attention Token to get some hype into their coin now that there's some educational material behind it. Let me know what you think in the comments. And if thus far you've gotten any value from today's video, feel free to give it a like. It would just help me grow as a channel, only if you've received value. Let's keep going. So we have a new statement out of JPMorgan, and we've heard statements out of Fidelity and Goldman Sachs and a lot of big players. This one coming out of JPMorgan, and just like my thought process, it's a long-term bullish indicator. They're saying, what will it take for a Bitcoin resurgence of interest on Wall Street? JPMorgan's global marketing strategist, Nicholas somebody says that Bitcoin could make a resurgence on Wall Street, according to an article published just yesterday by CNBC. Let's check this out. The stability that we are seeing right now in the cryptocurrency market is setting the stage for more participation by institutional investors in the future. So they're saying this stagnation, as I call it in cryptocurrency, oftentimes I express disinterest and stagnation. They're saying from a Wall Street investor perspective, this is what they want to see more, because it suggests some stability in the market. And the JPMorgan Strategist predicts that firms will show a renewed interest in cryptocurrencies as stability in the market grows and as Bitcoin's underlying blockchain technology grows more important. So as blockchain grows more important, that'll add to the renewed interest. He added that a Bitcoin's resurgence could be many years away, as regulators are a bit slow to realize the potential of the cryptocurrency. I feel this is a nice, honest perspective from a JPMorgan strategist, and I agree in the aspect that I think over the next few years, we'll see those institutions start to come in, but it will not be all at once. Maybe in a few years, there'll be a parabolic institutional FOMOing in, but for the next few years, I think it'll be slow and steady. What we need to see this market recover a little more and sustain and build. And that's coming out of JPMorgan as well. Very interesting. I like that. These next two stories, they came out yesterday. You might have already know, so we'll be quick. But ZCASH, the privacy coin, discloses inflation bug that could have created infinite tokens. I'll be quick on this because I know a lot of you guys have already learned this, but this was discovered 11 months ago, and this would have been horrible for ZCASH if this would have been disclosed immediately when it happened. And nothing happened. If you own ZCASH, no need to sell. ZCASH is fine. But if this wouldn't have been caught, somebody could have created infinite tokens for ZCASH. This is what scares me about privacy coins or just altcoins in general. This is why this market's so speculative. And please, ZCASH still has a great use case. It's still adopted by a handful of merchants. ZCASH still has a future. But it scares me because this is an article we saw in December of last year where Bitcoin Private confirms an addition of 2 million secretly pre-mined coins. Now this happened. The ZCASH incident, that didn't happen. That was saved in time, thank God. Sucks that we're just finding out about it now. But, with low cap coins like this, I just assume, or I don't assume, but the risk comes with low cap coins. And sometimes I just assume with higher cap coins like ZCASH, all right, other people, other developers, because I'm not a developer, they've checked it out. It's probably fine. Wild, wild west out there. Be careful, guys. Important to diversify. That's what's going on. That's what's going on with ZCASH. That's why ZCASH is a little bit down today. Binance, I'll quickly clue you in. Binance, an exchange coin, is now in the top 10. The first exchange coin in a long time, if ever, is now in the top 10. And it's because Binance has a new Launchpad project. As you know, BitTorrent token launched its ICO off of Binance, and you needed Binance coin or Tron coin to buy into BitTorrent token. They have a new one. Haven't really done the research on this. It's an artificial intelligence cryptocurrency called Fetch AI. That's the next one being launched off of the Binance Launchpad. Whether you like Binance or not, this gives Binance another use case, and it's one of the few coins. I mean, they've still lost value, but they've sustained a lot of their market cap compared to other coins out there. Very interesting. Good on you if you hold Binance. Second from last piece of news, contention coming out of Ethereum again. And I assume there's contention in all altcoins. We're just hearing a lot about it from Ethereum. And to be clear, this is not about the hard fork, Constantinople hard fork, that supposedly will be going out at the end of this month, February 27th. It's not about that. Just really quick, what the hard fork is going to update: optimization and upgrade. The 5 things for the Constantinople upgrade that are coming the end of February is, first update is bitwise shifting. This will allow developers to make some operations more efficient. So add efficiency to Ethereum. Number 2, deals with state channels, which allow Ethereum to better scale in the future. So scaling, that's the hard fork. Another update allows smart contracts to check the code of other smart contracts more efficiently. So less processing power in the Constantinople upgrade. And the last one, and probably the most contentious, oh, two more. Another one is, okay, so much like similar to how EOS currently implements multi-level transactions, another part of the upgrade, efficiency upgrade, will allow several actions to be taken on each transaction. So adding efficiency, and then probably the most contentious part of the Constantinople hard fork is the block reward adjustment, taken down from 3 Ethereum per block to 2, I believe. That's the hard fork. That's already happening. You know about it. And if you want just a brief sum up of what will happen in the end of this month, I'll leave that link in the description below. But this is the new piece of information that's coming out of Ethereum. Ethereum developers delay ASIC resistance proof of work algorithm decision until the third-party audit. Do you know the significance of ASIC resistance in proof of work cryptocurrencies? ASIC mining, the rigs, Monero is ASIC resistant as well, and the benefit of having your cryptocurrency be ASIC resistant is it leads to less centralization of mining, because I mean, you still have mining from GPUs and other things, but if you're ASIC resistant, ideally you'd have less centralization, and it's debated right now whether Ethereum should go into that or not go into that. Let me clue you in. The team wants to wait until the algorithm is audited by a third party. A developer explained that the audit is an attempt to establish how effective the algorithm would be in leveling the playing field for different kinds of hardware used to mine crypto, including GPUs, field programmable gate arrays, and ASICs. So they're going to go to a third-party audit to explain to them, or to test, how effective would it be for their cryptocurrency if they became ASIC resistant? What mining would they need to do to be the most effective? They're putting it off to a third party, which honestly is smart to get a second third-party opinion. And the audit, what will the audit do? The audit should give developers enough confidence to make a decision. And there is a timeline. While there's no set date on this audit yet, it's supposed to happen sometime in March or April, so this will happen after the Constantinople hard fork, if that goes through, which I think it will. And there's a direct quote, a little contentious. I guess this debate on ASIC resistance has been going on for several months, and a lot of people are wondering how it is going to be resolved. And one person answered in the question, how will this ever be resolved? One developer answered, it's resolved by us making an effing decision. Yikes. Hey, I get it. I mean, honestly, you don't want to be going back on things like this. Once the decision is made, ideally it should be the best for the cryptocurrency and move the crypto forward. So, you know, I'm no developer, so I guess my opinion would be I would like my cryptocurrencies to be as little decentralized as we can. The only downside, if you make your cryptocurrency ASIC resistant, I think you're always going to have to be upgrading and upgrading and upgrading. Monero does an upgrade every 6 months, I believe, to make sure their cryptocurrency, among other things, is ASIC resistant. Nothing wrong with that in my opinion. If you're more decentralized, let me know what you think in the comments. Team, feel free to subscribe if you want to be part of our daily crypto videos. I have one last piece of news for you, and this is something that we really haven't seen a lot in the last 6 months. Major Swiss stock exchange, SIX, to launch new blockchain-powered digital exchange. So in the last 6-12 months, we've been seeing exchanges, stock exchanges start trading digital assets, putting digital assets on their platform or on a similar platform, a new platform for them. They're using blockchain technology to power their stock platform. And this is big for a few reasons, because they'll integrate blockchain in their exchange, and this SIX Swiss exchange sees roughly $5.18 billion in daily turnover and has a market capitalization of $1.67 trillion. So obviously a lot of revenue in traditional finance goes through this exchange, and they're going to test and ideally switch to blockchain integration. Why would they do this? Well, in a direct quote, the fact is it takes 2 days at the system that they presently have. It takes 2 days for the buyer of a stock to become the owner. The trade itself only takes a fraction of a second, but after the payments have to be settled and titles transferred. If we put it all on our digital exchange, so once they integrate blockchain, then the whole process only takes a few seconds. This makes the markets more efficient, but at the same time also takes a lot of the risk out of the system. This is something I think before a lot more exchanges add cryptocurrencies to their exchange, I think we'll see a lot more traditional finance exchanges and platforms integrate blockchain into their system. And why wouldn't they? Like these guys said, it's faster, cheaper, and it's more secure. This will be one of the steps going forward into just making cryptocurrency part of everyday life. I like that. All right. Let me ask you one last question. Have you followed us on Twitter yet? If you haven't, why not? That's the first place we'll stay up to date with you on everything going on in the crypto space. But having said that, guys, that was the video today. I'll see you on Twitter, link in the description below, and I'll see you tomorrow.